Hey, good morning, everybody. Going to go over our Forex trades for today, Wednesday, August 3rd. Doing the video a little bit earlier than normal, so we don't have all the economic news out. There is some ISM non-manufacturing data coming out in about a half an hour, 45 minutes, excuse me. So we don't have that, but we do have, wanted to go over our trades, which we pulled out. We liquidated a correlation trade between the Aussie dollar and Aussie dollar US dollar correlated with the Kiwi dollar US dollar. And total size adjusted pulled out 3.9 pips, non-size adjusted pulled out 11 pips. So we're going to go over that in a minute. Not a lot of economic news as of yet. Like I said, it's coming out in about, just some coming out in about a half an hour and some more coming out in about 45 minutes. Again, it's non-manufacturing data, so it's going to be geared around services. So it's pretty important because 90% of the economy is centered around services. Therefore, we're not looking to scalp anything, because you don't want to be in a scalp using leverage going into an economic data point. So, but we'll see what that is announced. We do want to point out Bill Gross came out with a letter to investors. Bloomberg covered it. It's funny. He says paying these bond prices is not worth the risk, and that bonds shouldn't be where they are with pretty much record low yields. And then what happens? That was actually came out with that letter last night. What happens this morning is Treasuries extend their gains on the 5 and 10 year as the yields fall to session lows. Again, not all-time lows, which was just hit a couple of weeks ago, but session lows. So the Treasury market totally ignoring what Bill Gross is talking about. But the important thing about Bill Gross's article, which Bloomberg covered, as well as Bloomberg within their article, Bloomberg, they covered some other big bond guys, is that you're starting to see what we've been talking about over the last couple of years, that zero bound rates, negative rates, and even QE for that matter, don't give the desired outcome. And Bill Gross, in his statement, in his letter to investors, not only saying that paying these bond prices isn't worth the risk, but he's hinting that zero bound rates, and negative rates for that matter, aren't doing what the theory said that they were going to do. And this is on the backs of, if you remember last Thursday, the Bank of Japan, they left interest rates unchanged. They added very little stimulus to their stimulus package, and Kuroda, the head of the Bank of Japan, said that he has created or has a staff of people that he's assigning to look into the effectiveness of zero bound and negative rates on their bonds. And he even hinted saying that he doesn't think it's giving the desired outcome. So we're starting to see a shift in thinking. That's the first central banker to actually say those words, and this is Bill Gross and other huge big players in the bond markets hinting to it. They haven't said the words, but they've hinted to it. So this is the first we're really starting to see. It'll be interesting to see if that gains momentum going forward over the coming weeks, to see if they continue with beat this drum that extremely low interest rates, zero bound rates, negative rates don't really create jobs, don't really give the economy a boost, don't really grow economies, and that the central bankers need to start to reverse their thinking and start to normalize rates. Matter of fact, we have looks like futures are lower this morning, and from what the talking heads are telling us is that it's all based around the investors are worried about the central bankers, that they really have been disconnected to what's really happening in global economies. Again, we've been saying this for probably close to 2 years now, and it looks like it might be starting to gain some traction. Okay, with that said, let's go over the correlation trade, which we had on Aussie US dollar to Kiwi US dollar correlated. 40% of our normal size in the Aussie US dollar, and 36% of our normal size in Kiwi dollar. Kiwi dollar a little bit more volatile than the Aussie dollar, so therefore we had about 10% less than we had in the Aussie dollar. We held it through the Royal Bank of Australia's interest rate decision, which they did exactly what the street was expecting. So you saw it pulling in a little bit, and then this is the announcement, and then you just see the move right back up. In the end, you can hold these things through interest rate decisions or big economic data points, because you're correlated, because you're going to be long one and you're going to be short one. As you see here, we're short Kiwi dollar and we're long the Aussie dollar. And now it's just a matter of the money management, the size of the positions, and setting a mental stop and what you're willing to risk, and therefore, so you move on from there. So as far as ours was concerned, and again with the correlation trades, as you probably know from watching videos, there's many different ways to profit when you're in a correlation trade. So it greatly reduces your directional risk. Unfortunately, this one didn't quite work out to the amount of pips that we wanted. We took it off with about 11 pips on a size adjusted basis, on a non-size adjusted basis. We were hoping it would have been a little bit more powerful move, but it is what it is, and we took the profit last night. So in the Aussie dollar, US dollar, we're long. This was the actual analysis that we were long from 76.101, and obviously we were wrong in the beginning. Ultimately, was right as it moved up here. But even as it moved up, the Kiwi dollar was moving up with it. So what happened was last night we were able to get out of Aussie dollar, US dollar, basically flat at 0.76075 for a loss of 2.6 pips, or size adjusted 1.0 pips. But as that was happening, we had the Kiwi dollar continuing to move down here, and we were short from 0.72212. You get in them at the same time, you get out of them at the same time. So we got out at 0.72075 for 13.6 pips on the profit size, or size adjusted 4.9. In the end, 3.9 pips on a size adjusted basis. On non-size adjusted basis, 11.0 pips. We would take it every single day, all day. Some are going to be better moves, some are going to be not so good moves. But this was a not so good move, and we still were able to grind out the profits on it. That's the beauty of the correlation trading. So that's it. We're going to wrap it up. If you're still trading now, good luck. Remember, there is some economic data coming out, so you have to be aware of that. Don't ever take scalps moving into economic data points. So, you know, your hands are tied a little bit when you're scalping, so that's why the correlation trades free you up a little bit. And that's it. So if you're still trading now, good luck. If any signals come out, they'll be coming your way, and we'll be back tomorrow, assuming we get some action tonight, tomorrow morning. Have a great rest of your day.